Here we are on the S&P MMT. I've got live action on the opening bell. One of the things that we did was we did exactly what we should do, is that we pulled back, but we got above this half bar on the S&P. This half bar. So here was the 1, 2, 3 teenies down. Reversal, 3 teeny reversal, 3 teenies down, 1, 2, 3 to the price action. But the important part is that when it gapped back above, that was a price print in the ask. They bought the ask. They bought this spread. Look at this price spread here, 67. But let's take a look at the way that the S&P is moving versus the $1,200 call here that we have a limit order to sell at $13.40. What we're going to be watching today is each time that it pulls back is that you go up, but you got to consolidate at the higher teeny level price action ranges on the S&P when you're trading these calls. Because you can see how wide the spread is. It's rising over here. And at any time, we can undercut them and really create an emotional event. Because everyone is looking at the bid and everyone is looking at the ask. And it's going to take someone like me to rile things up a little bit between the bid and the ask. So what I'm going to have MMT Brian do is throw a flash trade at 1280 in the count of 1.5. 1001, 1001.5. And then now, there it is. See how he's changing that bid there? See, now do that again. My pointer's on it. Go 1280 and do it just 1001 to that 1040 over here. Okay? Come off of there now. There's a little bit of a delay too, folks. What we're doing here is that he is, are you off? Yeah. So now it's back to 1290, but these things have a little teeny bit of a delay on the screen. It doesn't matter. It's how he is in control as a MMT market maker. He can undercut these people. And he can see it's 1040 by 1290. But as the S&P holds that upper end of that support level, what happens is that the S&P now gains some traction. Here's a 15-minute chart on that S&P, and you're right up here, 1141 handles. Okay? As far as look at the 15-minute bars, they're all green, and they're all green. And the market has been open now almost exactly 1 hour, which is a 60-minute price action bar, and a 15-minute bar. And 1 more minute, you'll be at that timestamp within the overall movement and the light days of August. One of the other things I want to show you is MMTs. We can work that bid and ask. We already own the contracts and we're in control. The thing about being a market maker in the options, on index options, and the if you take a look at $10.10 close and you take a look, they just created a high print of $12. That's a $1.90 ratio from the close. Here, on the other hand, you've got a 9.35 intraday low. $10.10 minus 9.35. That's what the, so narrow range price action contraction, meaning that the price did not go down to the 750, 770 area. And you can see right here 1190 printed. The last print was someone at 10 contracts at $12. This is a 12 contracts at 1190. But look at the ask. It's $13 by 1050. Now take a look at that spread between that bid and the ask. When you own them at the wholesale price below the market, then you become an MMT market maker. Now, I'm going to change that bid. I'm going to change the whole market. Throw it out there at 1290, 1001. 1290, 1001. There it is. My pointer's right there. Come off of it. Now, if the MMT came off of it, then someone else came in at 1290, which was the last $1 up from the last print. Look at the 1190 and look at the 1290. Look at here, 1390 printing right here in between that 1050 and that 1290. That's $1 difference from the ask right here. So MMTs, when it comes to trading the S&P, you have to look at what the price print yield or the price print ratio is from the low to the high and from the high back down. And right now we have 1190 print on this index option. And we're in control because you can see how wide the bid and ask is. Anytime we can come in here and do that 1290, we can throw a 1250 out there and contract it to $2 between the bid and the ask on the count of one. Show it here. There's 1250. That's us. Now come off of it. Come off. Now look what we created. Someone came in at 1260. We created that emotion. Now they're back to 1270. And what we do here at SMF as a market maker is get wholesale over here so that we can control the exit with the profit. Bottom line, we're in control. Look at the spread between the buyer and the seller in these contracts at a $1,200 call, a 917. Learn how to trade the S&P index options, working the bid and the ask, creating the emotion. See, when we did that, look at here. We dropped it. Look at there, 1210. They're contracting that 1050 by 1210. That's a contraction between the bid and the ask on these contracts with 1190 print. 2 sets, 25 contracts in total. There. MMTs, look at the contracts. 500 at 1160, 200, 200. A 600, that's 1,500 contracts there. Then you have another 5, 6,
short Google,
9,
Apple's
1,900,
they're going down.
about 3,200 contracts, Brian Plain said, that just went off at 1160 print. I'm hearing you, Tina. At what price level? Boy, everything is staying exactly like we said it would, and we are in control. That is the last price print. On the which put?
515 put.
Oh, on Google? Is that a weekly?
Mm-hmm.
Wow. Let's take a look at Google while we keep the S&P in the background. Oh, you have a little contraction. Look at those breakouts today. This is what stocks haven't been doing. That over the weekend we trained specifically on how the you come back to the half bar and then you make another higher high. And that it would be verified by the high IR reading so far at 7:55 a.m. Pacific Standard Time, 8/23/2011. And at this point in time, everything is working just the way that an MMT would want it to work, and that's that leverage up trade and that price action at holding that SMF half pro action bar right here. Never got below it. Take a look at the teenies. 1, 2, 3, 4, 5, 6 teeny reversal at 78 cents. So if you take 78 times 6 teenies, that equals $4.68. And you finally have a teeny contraction. And you must go below 85. It's very strong. All equities remain strong, and so does the S&P 500 contracts. Nice identity on that teeny reversal, Tina. That's perfect. That's exactly where it is. this must deteriorate. 1.25 ratio here versus that. It just made that last high, 2140, right there, right where you called that reversal to the penny. You did that. Excellent. S&P 500, $1,200 call. The skills of a market maker between the bid, the ask, the entry to the exit. And Google, Tina just identified a short. That's a teeny drop at 78 cents.
Out of the short.
Okay, and I'm hearing that she's coming out of the short. But if it weakens at some point, she's got to have down bars just like she had here. So she exited right there on that teeny line, and that's perfect because that's what it was going to give her. Okay? And you were doing the put option. Is that what you were doing? The 515 put?
Mm-hmm.
Nice. And how did you like that 515 put? You know what I really love about this trade today is that the Google $500 call has got a nice move of $9.90 from the low here today. That's leveraging up in the options now. And I'll do some separate videos with my MMTs that are trading these options just like Tina is, and we'll do some analysis on the put to call ratios and throughout the day as to where the inflated and deflated valuations are. So therefore they will have a calculated number that they can work with. And right now there's the bid, there's the ask. So what? Look at the contracts that went up. I'm going to conclude the amount of S&P 500 contracts traded at that price added up. 500 times $1.60. So take 500 and go times $11.60. A lot of money. That's the conclusion of an hour and 30 minutes. We're 7:59 a.m.
I just missed that big reversal.
On which one? Google? Oh,
Yeah, look at that.
it had a
It
big
made one
reversal finally. Is that what you're saying?
Yeah,
My
look at
goodness
the whole-
sakes. Oh, boy. Let's take a look. There it is. Look at that 1, 2 teeny. So it's a 1, 2, 3 teeny, right to 3 teenies from the reversal high, right there on that Google. And look at that IR below 85, and look at that decline in the current ratio high of the day and reversal at 1.15 equals $16.68 on that high to that reversal right now at $14. So there's your spread trade right here on that short so far.